This section deals with payroll management using Tally. So far we have learned about core accounting concepts. So now let's move away for time being from those concepts and talk about some corporate accounting. So payroll comes under corporate accounting. There are certain regulations and laws that corporates need to follow while preparing payroll for an employee. So that is why concepts like payroll falls under corporate accounting. So what you will learn is how to structure employee salary that complies with corporate laws. And from Tally perspective, what you are going to learn is setting up of salary structure, define the salary breakdown which contains components like basic, HRA, DA and so on. You will learn about what part of employee salary gets deducted and how much employer contributes to benefits of employee. And you will learn about defining attendance of an employee, process salary and payment of the salary. And apart from salary payments of employees, an employer is required to make administrative payments to the government. So what are those expenses related to payroll will be discussed in this section. So salary. Whenever you hear this word, what comes first into the mind is a net figure, an amount someone earns. But there is a lot more to it apart from the net amount figure. In corporate world, an individual salary is made up of different pay heads. So on your screen you can look at different pay heads like basic, hours and allowance, conveyance and so on. And each individual pay head contributes to earning of an employee. Let me explain the breakdown of the given salary. The employer is paying basic of rupees 10,000, which is a minimum pay of an employee. The employer is paying rupees 4,000 towards rent expense of employee, and conveyance, which is transportation charge of an employee, is rupees 800 paid by the employer, and the employee is also earning overtime of rupees 200, and the sum of these pay heads makes the gross salary, which is 15,000 rupees. And depending upon the organization, there could be more pay heads which makes the gross salary of an employee. So this is what comprise of a salary, and the given pay heads are referred as earning pay heads because it contributes to earnings of an employee. Now from this gross salary, some deductions will be done and we will arrive at the net payable salary amount. Most organizations deduct provident fund at 12% of basic. It also deducts towards ESI, which is employee state insurance, at 0.75% of gross salary, and any individual earning salary is required to pay professional tax, and professional tax is also deducted by the employer on behalf of employee. So after making all those deductions, we arrive at net payable salary amount, and any pay head that reduces the earnings of an employee is referred as deduction pay heads. Now a question that comes into the mind is whether these deductions are lost to an employee or not. Of course, deductions reduces overall income, but whatever amounts that are deducted are contributed towards various government schemes which will yield a return to the employee in future. For the given salary breakdown, a sum of rupees 1200 is deducted every month from the employee's salary, and this deduction goes towards provident fund account of an employee. So depending upon the basic salary, every month a sum will be deducted from the employee salary and it will be getting accumulated in PF account of the employee. And after working for few years, when employee decides to resign, he can then apply for withdrawal from PF account. And let's say the employee has worked for 5 years and the amount is getting deposited in his PF account for the given employment period. So during those 5 years, he will be also earning interest on those deposits, and usually PF account yields 7 to 8% of interest. So in that way it will benefit the employee. So at the end of the day, whatever deductions that are happening will come back to the employee, and deductions like professional tax are expense to the employee. And what is PF, what is ESI is discussed in the subsequent part of this section. So until now, whatever deductions that we talked about are referred as employee deductions, which means the employee is contributing towards his PF account or towards his ESI account, which also means these are the contributions taking place from employee side. Like employee contributions, there are contributions made by the employer as well. Corporate laws in India requires employers to contribute equal amount towards employee provident fund and towards ESI. And equal contribution is towards PF at 12% and ESI contribution is at 3.25% on gross salary. So what it means is that the employee will contribute towards his PF account at 12% and equal amount of PF is contributed by the employer. So this contribution by the employer can be considered as an extra contribution towards employee PF. And apart from contributions, there are certain administrative expenses that an employer has to bear, and those expenses are PF administration expense at 0.5% on basic amount and towards EDLI at 0.5%. Administration charges are expense towards department, and EDLI is an insurance scheme which benefits the employee. Whenever an employee is registered under PF, he by default gets registered for EDLI. And by law, employer is required to contribute 0.5% of basic towards EDLI. Alright, so now let's talk about EPF. You can look at the content on your screen. It is very much self-explanatory what EPF is. And for a detailed definition, and if you want much knowledge about EPF, then you can learn about corporate laws and you can read articles on internet regarding EPF. So what organizations are required to register under EPF? So it applies to organizations employing 20 or more than 20 people, and it is applicable on those employees whose basic is up to 15,000. So for those employees whose basic salary is up to 15,000 are mandatorily required to register for Provident Fund. And those employees whose basic is above 15,000, assume that the basic is 18,000 rupees, then by law it is not required to register for Provident Fund, but an employee may voluntarily register for Provident Fund considering future benefits. And when such employee register for Provident Fund, then 12% of 18,000 would be deducted from his earnings. However, the employer is not required to contribute on basic of rupees 18,000. The government has prescribed a limit that an employer may limit his contribution on basic up to 15,000 rupees. So even if the basic of an employee is 18,000 rupees, the contribution from employer's end would be on basic of 15,000 rupees. So by law, an employer is not required to contribute at basic salary, but if an employer wishes, then he may contribute on complete basic salary of 18,000 rupees. Or employer may also limit the employee's contribution towards PF on basic of 15,000, and the employer also contributes on basic of 15,000 rupees. So all these things are discussed between employer and employee in accordance with the organization's policy. So these were few things that you were required to know about EPF. Now let's talk about what ESIC is. I want you to read the content which is on your screen and which is self-explanatory, and try to focus on the contribution rate. So for ESIC, 3.25% of gross is contributed by the employer and 0.75% of gross is contributed from employee's end. So by corporate laws, if your organization requires to contribute towards ESIC, then you need to deduct that amount and also contribute from your end towards ESIC. Now there are few things which you are required to know regarding employer's contribution in Provident Fund. So when employer contributes 12% of basic towards Provident Fund, out of that 12%, only 3.67% goes towards Provident Fund, and the remaining 8.33% is contributed towards EPS, which is Employee Pension Scheme. and the contribution towards EPS is limited to rupees 1250 rupees. So that is the maximum contribution which can go into employee pension scheme. So the reason for the limit is you can look at the ceiling limit, which is defined by the government. So 8.33 of 15,000 is 1250. And I already talked about what PF admin charge is and what EDLI is. You may pause the video and read about the same. And to conclude about Provident Fund, we can say that the employee contribution is complete 12%, and the employer contribution of 12% is divided among employee pension scheme at 8.33% and 3.67% towards employee provident fund. So the calculation for provident fund from employee deduction is straightforward 12%, but you need to be extra careful while calculating employer contribution because that contribution is divided among two parts. And at the end of the video, I will show you with example of employer contribution when basic is up to 15,000 and when basic is above 15,000. But before that, I want you to go through with the summary of what we have discussed so far. So you can pause the video and have a look at your screen. Alright, so now let's understand with an example regarding employer PF contribution. We will be discussing two cases, and this is the first case where employee basic is below 15,000 rupees and I assume it as 12,000 rupees, and we are calculating contribution from employer's end and not from employee end. So that is why we need to bifurcate PF contribution in two parts, which is EPS at 8.33% of 12,000 amounts to 1,000 rupees and EPF at 3.67% of 12,000 is rupees 440. So total PF contribution from employer is rupees 1,440 rupees. And I have also calculated the administration charge at 0.5% on basic, which amounts to rupees 60. And when we talk about PF administration charge, the law requires that the employer is required to contribute a minimum of 500 rupees towards the charge, and the charge is calculated on sum of the basic of all the employees and not individual employee. And in case if the total cumulative charge is below 500, then the employer is mandatorily required to pay rupees 500. And EDLI is also calculated at 0.5% on basic, which is also 60 rupees. So that was the first case, which is a simple example. Now let's talk about the second case where employee basic is above 15,000 and I assume it as 18,000 rupees for this example, and the employer also agrees to contribute on complete basic salary of 18,000 rupees and not limiting his contribution on basic of 15,000. Now let's talk about the calculation part. So the EPS at 8.33% of basic amounts to 1,499 rupees, and if we remember, the law requires that the EPS amount should not exceed more than 1,250 rupees. So we need to subtract 1,250 from the resultant amount so that we can remove the excess EPS, and with this the EPS contribution would be 1,250 rupees, and the EPF contribution at 3.67% amounts to rupees 661, and the excess of EPS of rupees 249 rupees should be added to the PF contribution. So the resultant amount is 910 rupees. So to summarize, the PF contribution would be 910 rupees and EPS contribution would be 1,250 rupees. And PF admin charge and EDLI are calculated in usual way at 0.5% of basic. So we are done with most of the theory part. Now we will try to implement payroll in Tally. where we are required to set up the following things. And by looking at the content, one may feel that the topic could be lengthy or complex, but it is not like that. And believe me, having knowledge of payroll in Tally will add extra worth to your profile when you appear for a job interview. And for those Tally users who are running a retail counter and want to learn about payroll without applying any corporate laws like EPF, PF and all those things, and you just want to calculate the salary of your labor depending upon the days he has worked. So at the end of the section I will add a video where we will discuss a simple payroll method where we will calculate the attendance of the labor and calculate his salary. Now in the next video we will start working with payroll in Tally.